super excited to chat with you today, Cristi. And for those listening to this or viewing this for the very first time, Cristi and I are going to talk a little bit about getting a loan in today's market. So my formal introduction, this is Cristi Hughes. She's from Dwell Mortgage. They have a physical office on South Whidbey Island in Freeland. Cristi, thank you so much for joining me today.
Thank you for having me. I love talking about mortgages.
I am delighted that you do. And one of the reasons I have been so fluid in my conversations with buyers and sellers, truthfully, is because of the amount of education that you provide to me with your weekly updates. Talking to first-time home buyers, are there some different things that you address with today's market?
Melene, anytime we meet with a home buyer, whether it's their first home or their second home or they've bought many homes before, we always want to ask a lot of questions, because as a lender, for me to put them in a loan that fits not only just their current lifestyle, but gets them positioned for whatever their long-term goals are, we need to know, is this a home they're going to be in for a couple of years? Is this their forever home? Is this a primary residence? Is it an investment property? So once we have the answers to all those questions, then we can kind of get to the meat of it and start showing them different loan options or loan strategies, if you will, that best fit what their goals are.
You can rent forever if you want, but you're putting that money into somebody else's mortgage and the equity that they're earning. So if you have the ability and you're choosing to look at being a homeowner, maybe for the first time, it really doesn't matter what's happening, right? If it's important to you to get that loan now, to buy the home of your dreams now, there's always an opportunity for you to work with them.
Renting is not necessarily a bad thing. If you're only going to be in a home for a year or so, maybe renting is your best option. If you plan on being in the community for a couple of years or more, if you compare the cost benefits of owning, oftentimes we can get a similar payment once you take into consideration the tax benefits. You know, you're paying into your own equity as opposed to paying a landlord's mortgage payment. There's not a guarantee that rates are going to go down. But if we look at historically, rates have in every single recession gone down. And so right now, buyers have opportunities that they didn't have 6 months ago or a year ago when the rates were 3%. Yes, right. Rates were lower then, but guess what, Melene? If they didn't have 100,000 over asking, if they couldn't waive their appraisal contingency, if they couldn't bring in extra money in case the appraisal came in low, those buyers, especially like FHA buyers, VA buyers, conventional buyers with 3 or 5% down, their offers were not getting accepted anyway. So yes, we're in a higher rate environment now, but honestly, the opportunity for home buyers to get into a home is much greater now than it was when the rates were lower. And again, there's no guarantee, but if history repeats itself, and it typically does, 6 months, a year or so down the road, they should be in a place to refinance and get a lower rate. So right now, just getting in that home is the object.
You and I recently closed a fantastic transaction. They were able to get approval from you and your team in a very short period of time. And I know part of that is the prep that you do to help them get their documents in place. It gives you time to analyze their ability to get a home loan and so on. If someone were doing this process for the very first time, I know they need to save their W-2s, their recent pay stubs, and they might not even know what their credit score is. So what would be even just a 30-second introduction to somebody about what does it take to apply for a loan?
When we're working with a buyer, we want to get them fully pre-approved, whether they're going to go in under contract in the next week or so, or maybe it's 6 months down the road. But the sooner we start that loan process with them, I feel like the smoother it goes, because a lot of times a buyer may think, oh, I'm going to go into escrow 6 months from now, and then the perfect property comes up, and we just want to make sure that they're in a position to move on it. And so we get everything up front. W-2s, pay stubs, bank statements. If they're self-employed, the documentation is going to be a little bit different than if they're paid W-2, but we're going to get all that up front and try to do as much of the heavy lifting for the consumer as possible.